Let me know if you can hear me, please. I'm going to say that in the chat as well. All good? Great. All good. Fantastic. Loud and clear. Good. Right. How's the sound? I've actually got a new microphone, so should be clearer these days, hopefully. All right. Good stuff. Thank you. Right. Sharing my screen. Fantastic. Good news. Right. Today we have Canadian jobs data coming up very shortly in 14 minutes. And what else do we have? Consumer credit. Not really interested in that. Nothing else. So we have a calendar event free day, which is nice. So we can just concentrate on price action and market structure. So looking at the dollar, as discussed, or I think I sent yesterday in the group, in the chat, in the analyst room, a bearish outlook. So we got the move lower, and now we've come up. But what we've done is we've printed a W formation on this 1 hour chart. So what are we looking for, guys? Anyone care to hazard a guess? Pump and dump sounds good. Dollar to fall sounds good. Dump, yeah. So with these W formations, they are reversion patterns. So those that have gone through the education that I've put out in the group, you would have likely come across some videos on M and W formations. So this here is a W formation where the price has moved away strongly from an area where prices were agreed, and that's AKA basically the neckline of the formation. So when the price displaces like that, strong candle, doji, potential for a engulfment to the downside, we're expecting a move down, right? So a move into the neckline. So that's where the point of control is, okay? So this volume profile, which you can't see because for some reason it's hidden behind the candles, but you get the picture. The highest volume nose will be over here where the neckline is. So move up to come down. We have the same pattern on the 10-year yield and not quite on the 2-year, but on the 10-year we have that same W formation, same scenario. Displacement move down towards the neckline. Okay. Excuse me. Right, so if we're bearish dollar, then we're looking for shorts in dollar yen. Excuse me. I put this out yesterday then, so we were looking for the move up to come down today. I don't know how high it's going to come up, but the thesis is for a short in dollar yen as we come up into resistance. All right, so what we'll be doing is monitoring this for a break of the trend line and bearish structure to short. So how long have we got into this data now? 10 minutes? 12 minutes. Dollar CAD. Data coming up. The price broke that bullish trend yesterday. Well, it broke it today, but the trend from yesterday. So we are in a bearish environment. That was the structure that it broke over here that I'm going to turn to red to indicate that we're bearish now. So we're looking to sell high in dollar CAD, but we need to wait for the data. All right, it's an inside day. That's why these candles are yellow. It's inside of yesterday's range. Therefore, we're targeting either the highs or the lows. And as per the bearish dollar outlook, the lows are, biased towards the lows. Lows of the day. And below there, we'll have the point of control of yesterday over here. So this is where volume was at its highest. Transactions taking place, prices agreed. Therefore, it could act as support. And the point of control tends to pull the price back into it, right? So if you get a displacement away from that area of heavy volumes, the price tends to pull back towards it, and that's what's happening at the moment. Right. So, bullish euro dollar. So looking to buy low within the day's range. Now, as you're aware by now, I generally like to wait for the Wall Street open before I commit to anything, but that's not to say that you can't get any opportunities between the New York Open, 7 a.m. New York, and the Wall Street Open. I mean, you definitely do get opportunities. So this euro dollar is breaking the. Let me clear up the chart entirely. And let me put it onto the. I can't get rid of this. It's not what I want. What's going on? Can't seem to get rid of that. Okay. All right. Right. Okay. So we've broken almost, not quite, pretty much. We're trying to break. I'll get rid of the inside day bar indicator there. Right. So it looks like we're starting to break this structural point here. Yeah. On the 5 minute look. So now that's not to say, okay, if we break it that it's just going to keep going up. I mean, it can easily come back in. Within that respect, I mean, ideally, you want to be buying within this area. So what we've had here is a displacement testing trendline resistance, but we're yet to break the structure. So we've had this displacement. Nice to see a nice close above here and a pullback into the origin of that displacement for a long. So one way of going about that is to leave a limit order in, a buy limit. So if the price were to come in, you get tapped in, presumably this would act as support, okay, at yesterday's closing price, and you get a subsequent move up and ride it. So that's one way of going about it, or we can wait and just monitor it and see how we go. Because alternatively, I mean, well, we're starting to break it now. How many have we got? Oh, has this data come out yet? 5 minutes. Yeah, as you can see, it's trying to break up, and if we get a close above there, then the structure will be broken technically. But if not, alternatively, this could come down, tap you in, and keep going. So that's the risk of putting in a buy limit. What I'd rather do is just monitor it, and then if we come down towards it, look at the price action, monitor it, and ensure that we're getting bullish structure to ride up and lean against. Right, cable would be the same kind of scenario. So cable is leading the way. It's actually broken structure there. Look, this indicator here shows you that. The Smart Money Concepts indicator by Lux Algo has broken that high. Okay, so we've got a broken resistance. We're pulling back into this area here. This is the origin of that displacement. All right. So in this regard, if you put in a buy limit, you would have been tapped in by now and riding in a little bit of profit. Stop below the lows here, or if you want to be more conservative, further down at the lows of the day. But I mean that is essentially that is a setup. I mean you can buy that with your stop below structure. Okay, so moving on. Any questions, guys, with regards to anything we're looking at? Or do you want me to look at any pairs in particular? This here is the US 30. Okay, Euro, New Zealand dollar. Just touching on this US 30 then. So we've had a dump, and now we're getting the short squeeze to the upside. Waiting for the Wall Street Open really with this one, but we're down low. We're breaking structure. So pumping up, maybe to come down. Again, this is the origin of that displacement. As with the euro, you can leave in a buy limit order down here to ride higher with prospects of a weaker dollar, because they are negatively correlated. So if we're looking for weakness in the US dollar, we can be looking for longs in the indexes. So we've got the same for the Nasdaq and S&P. Now we got a break of, let me look at this, not yet. We're trying to break of structure here. So this was the lower high over here before the lower low, and we've come up to test that at the moment. So we're trying to break that structure. Well, 26 minutes. This data is out at the moment. So let's have a look at what's happening with dollar CAD. What's the data then? We were looking for a higher than expected unemployment rate to weigh on the Canadian dollar. What have we got? No, we've got the opposite. So again, that's a short. So this came up into the neckline of that M formation, right, and sold off. So that is an example of these formations. This is a W formation, and it's popped lower below the neckline. It broke structure over here. So this is a broken down market, right? Um, Personally, I don't trade news um, until after the dust has settled. So in that regard, what I mean by that is that, I mean, this, well, look, this price has spiked. Look at that, it's just dropped very hard on the 1 minute chart here. So by that I mean the market can go where it wants to go, right, on the back of the data, but it tends to be volatile and give you two-way price action. So trading the news can be pretty hazardous. If you were to short that with your stop presumably above, it can quite easily come up. We've seen it time and time again, regardless of what the outcome of the data, and you'll get stopped out. So I'd rather let it go and not take the risk. But if there were to be an opportunity to get short, if the price action gives you the setup, so I'd be looking for a rebound, a correction, some consolidation, and then signs of weakness again. So an engulfing candle, for instance, that engulfs the consolidation, and that's something you can ride and sell at a better price, hopefully. And because the volatility has calmed down, you're more likely to get a trend rather than a choppy outcome. Right. So how long we got left on this candle? 15 seconds. I mean, if this were to close like this, I'd be okay at selling. We're engulfing that correction. Um, we're breaking now what yesterday's lows. So this it's a possibility, but I don't like to get on board of things that are already well in the money. I'd rather leave it and look at opportunities elsewhere, or wait for the pullback. And that could be within 15 minutes. So you can just monitor this on a 15-minute candle. I mean, how was that data? Was it particularly bullish? Absolutely. Well, it was, wasn't it? It was bullish for the Canadian dollar, without a doubt. So, moving on to quick glance at gold. So gold, what was gold yesterday? First red day. No, it's first green day. Right, hold on. What have I put that under first red day? First green day. So by that I mean yesterday we came down low, right? Up and low. And then we moved back up. So we effectively, what we were doing here is we were closing higher than Wednesday after a series of red days, so bearish closes. So that's a sign of bullishness, right? So you can expect for that bullishness to continue. So on the daily chart, you're looking for a bullish correction. So we've got the Yesterday was a bullish close, impulse, bullish close, correction. So we're looking for longs in gold. And I anticipate a move into the 38.2 at least. And if you look left, well, there's that high up there. So what day is that? Wednesday's high has a slight correlation, well, pretty much bang on with the 38.2. Looking left, again, you've got a high over here, a high over here, a low, right? So this was an area that was respected back in the day over here, right? So you've got that correlation. I mean, even up to the 50% area, 50% mean reversion. You've got correlations here with that low as well over there. So that's a area that can be targeted. Not to say that it can be achieved on the day, but what's the ATR? So right, I came across a new indicator which was pretty useful. It's ATR panel, I think it was. Yeah. So this gives you the so over the last 21 days, it gives you the average of the range on any given day, which is what is this here? Last value. Is it doing this properly? $16. Just going to double check that. I think it is about $16. Yeah, $16. So you can use that ATR as a guide. I mean, it's not set in stone, of course. I mean, you have days where the price is you know, comes short of the ATR or it exceeds it, but it's just gives you something to lean on. So what's the ATR? What's the range today so far? So you can measure today's range. And we've only had what? About $8 of range so far. So there's plenty of opportunity to the upside um, to come up into that golden area, right? So even slightly above the 50% mark. I'm looking at the chart that I'm sharing. I've just seen your comment here, but I mean, I'm sharing the gold chart. You should be seeing gold. It's dollar CAD. Bizarre. Davs, try logging out and coming back in, rejoining, and see if that improves your. Yeah, leave the room and come back. That could fix it. So, with respect to gold, then, how would we play this? So, what I'll do is I'll clean up the chart and note that we're targeting into the mid 30s. I'm just going to clean up the chart. Let's see what's going on. So we've got this structural point up here that will be guarding us, guarding the 30s. So that might be a sticky area to to get through. Um, hmm. I mean, technically, we're actually still on the front side of that bearish trend until we break the 29s, but that will be a bit late in the day. Well, hold on, let me revisit that. Yeah, so technically that is the structure. We've broken microstructure, that high there. So we've got a higher high, sorry, a higher low, right? So the market is trying to move up. But while below this area here, there are definitely prospects of a opportunity to buy low, right? So we're looking for this to come back inside so we can take advantage of a pullback and a better price to ride higher. Okay, so while we're below this 29 level, we're still on the bearish side of that trend. Okay. Right then. So any pairs you want me to look at? I'm going to go to Euro New Zealand dollar. Right, what's happened here then? So all right, so we're on the backside of that bullish trend, that longer term bullish trend, right? We've broken structure, we've come down, we've corrected, we've moved lower, we've moved up and into resistance. So the old trend, bullish trend line has acted as resistance. So we're tracking lower here. Let's get rid of that outlook from yesterday. And this, we've broken that level there as well. Well, it seems as though we are trying to move below last week's lows. So on a pullback, the bias would be to short and target a break of last week's lows, right? So impulse, correction, maybe there's more to come in the correction, maybe to retest those lows, perhaps, and then the continuation to the downside. Euro has broken structure and is on the way back down. Okay, yeah. Right then, well, I mean, this could act as support here. So, dollar averaging. What you can do is you can take a long, I mean, that's a very strong, excuse me, that's a very strong correction. So there's probably some mileage in it yet. But given this structure here, it could quite easily come into here, or I mean, it already has, and peter out and move higher from there. Right. So dollar cost averaging, you can take a long, right, with your stop down here, and obviously doing that, you're not going to get as a healthy risk to reward, but still, I mean, double your money isn't a bad scenario. And if the price were to continue lower into that preferred and more discounted area, well, that would be fine as well. So you'd be obviously losing money on the way down, but the idea would be to buy more here, and that would bring down your average price, so you'll be losing less money, um, but at a higher stake, and then you'll be banking on the price um, petering out on the downside and then moving up. So, so by doing that, you're not missing out on any the opportunity. I mean, if this were to only come into here, stay here, and then move up, at least you're in the trade, but you're just in at less reward, and presumably you're not going to go in uh, fully loaded because you'll leave someone to try and get involved down here as well. So, but you could always add to your position on confirmations that the price is heading higher as the price structure shows you that. All right, so that's one way of dealing with that scenario. But yeah, there we are. All right. Euro dollar has broken structure. Is it? Yes. Yeah, that's what we're looking at the moment. We've just talked about that. So it's breaking structure. I mean, it's pinned. Crikey, I mean, that was a strong move, wasn't it? Breaking. How many pips is that? It's about 8 or 9 pips or so. That wick. So, I mean, technically, yes, you would argue that structure is broken. Even though it's wicked and come back inside, it's, I mean, obviously on the lower time frames, that's going to be a definite break of structure. All right, so we're technically bullish now, but we're looking for a discount. Any other pairs? Right, with 8 consecutive bullish weeks for the Dixie, is it getting too overcrowded dollar longs? How far can it still go? Good question. Let's have a look. So, I mean, this could quite easily continue higher, but it's the less likely scenario because of the, as you said, how many weeks? 8 consecutive weeks. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, we're in the 8th consecutive week of longs. So you presume the correction would be imminent. So that's what we're playing for today, right? Across the board. We're looking for dollar weakness. And we're getting it. Yeah. So we've come into the neckline of that W formation very strongly. That's not to say that this won't give us an opportunity. By that I mean it's come in strong, and as you can see, it's retracing already. So we're looking for a discount. So displacement, bullish correction, continuation to the downside. Dollar yen. Let's have a look at dollar yen. Dollar yen. So, yeah, we've broken structure. We're coming back up into the peak formation on the day, which is up here, and we're looking for shorts. So you can leave a sell limit in this area here. You can sell at market, but what I'd rather wait for is confirmation. You see, so the price can come up and it can keep going up. So what I'd rather wait for is the price to come up and show us, literally tell us, right, I'm going back down, so it'll come up, it'll consolidate like we've had here, and it'll blow off again, perhaps. Right, nothing certain, but that is the most likely scenario. All right, so what are we, 10 minutes now? 10 minutes away from a new hour. So another tip is to wait for 15 minute rotations, right? 15-minute rotations. And then when we hit the hour, so the hour, when a new hour or a new 4 hour, those tend to give you an impulsive movement. So if you're looking to short, keep an eye on the clock. And as we come into a new hour, hopefully by then you will have 5-minute candles or 1-minute candles giving you bearish structure. And on that new hour, bang, the price will move sharply more often than not. And that puts you in the money very, very quickly. And you can maneuver from that. You can, if you're conservative, you can go to break even very quickly. Um, so just thought I'd point that out because we're approaching a new hour. Any other questions, guys? Otherwise, we're going to roll up our sleeves and get to the screens. And I wish you all the best of luck for today. May the markets go with you. End the week strong. Manage your risk, right? Trade the setups. Don't just get in because you think it looks like, it feels like. Get in because the market shows you what it's going to do. Structure, price action, behavior of price. Look at the clock. What time is it? Are you in the middle of a new 15-minute candle? Would it be worth waiting to see what the 15-minute closes? Does it close bullish? All of that jazz. Yes, we're in anticipation of a bullish outcome for the Wall Street Open for stocks, as stocks are negatively correlated to the dollar. And at the moment, the dollar looks, well, it is, I mean, it's showing you it's bearish, yeah? Right, so we're looking for a weakness in the dollar today. All right, we've broken structure over here. That was the high. We've broken that structure there. This is the key. This is the line in the sand. So I'm going to take off all of these drawings and just mark that low. Right, we've pierced it on the lower time frame, so that will probably give us some 5-minute closes below. There it is. So we've technically broken that low. So we are technically in a bearish environment. We're on the backside of this week's trend. All right, so Monday, Tuesday, so we've broken that trend line. Doesn't look like it though, does it? But hold on a minute. So that is no, we haven't. So that is the week's trend, but we've broken the micro trend on the inside. All right, so we'd be expected to move in on that trend line, and then it'll be a question of whether we're going to continue and squeeze Wednesday's longs and even into Thursday's longs. Right, so that's the bias for the day ahead. Okay, I don't know why you can't hear anything, Quintin, but the open is at 9:30 New York. So we're a couple of hours away from it yet. A video will be sent of the meeting shortly. Yeah, sorry, what was I talking about? So we're 15 minutes away from 9 o'clock Wall Street, so we've got 45 minutes until the open of Wall Street. Yes, we did gold, but I mean, I can show you again. So gold is still on the front side of the bearish trend, but we're biased to go long. So we're looking for the price to be at the low of the day to buy it. So we're getting a very nice move. Hopefully this will come down and stay down and around the Wall Street open. Doesn't have to be the Wall Street. Doesn't have to be 9:30 exacto. You know, it can be 15 minutes before, 15 minutes after, an hour after, half an hour before. But the point is, the closer you get to the Wall Street open, the more chance that you're going to get strong volatility and fingers crossed in your favor. So you'll get a fast trade. So you don't have to sit through, a pain trade of watching paint dry all day long and hoping that the price will continue in your direction. But what we're looking for is an opportunity to get in at an optimal price and a fast move and outcome. And you're done for the day, stress free. That's the way to go. Yes, I'll be online in the ask analysis room, or whatever it's called. Ask our analysts in that area in FX Street coverage. All right, so we'll be there. Right then, guys. So good luck today. Thank you for being here. I appreciate you all as always, and speak to you later on. Cheerio.